my channel, stocks and books by Bree. Well, we talk about buying stocks and dividends, dividing and supplemental learning. Want the secret? Gotta read. Here we go over the fundamentals you need to succeed. Major keys, you might get some gems, economic gems. So be sure to go hit subscribe so you can stay linked in.
Hey, what's up, family? My name is Brehon and I'd like to welcome you guys back to the channel. We love focusing on our own financial and personal development. If you're looking to learn about some great stocks, if you're looking to learn or listen to some audiobooks or just listen to some book summaries, this is the place to come. Stocks and Books by Bree. Now, look, family. Target is crashing. Walmart is crashing. It seems like the whole stock market is taking a tumble right now. And before I get into saying the things that I want to say, I want to play just a part of this clip from Yahoo Finance on Target and Walmart.
And as we were just talking about, a rare miss at Target and how, with the retailer disappointing on earnings this morning, the shares plunging by 25%. And Target citing what it says were unexpectedly high costs that hit profitability. It is set to raise prices for consumers to some degree. Let's dive into these earnings with Steph Wissing, Jefferies Managing Director of Consumer Research. Steph, it's great to see you. To help us sort of make sense of this report on top of Walmart yesterday. What's your takeaway here? How painful is this going to be for Target? For how long?
Yeah, it's great to see you as well. And I'm sorry I'm not bringing better news. It has been a wild 48 hours in retail. We heard from Walmart yesterday, Target today. And I think one of the things that really stood out to us was just a common pattern. We're seeing both companies are signaling that their stores are seeing stronger traffic versus e-com. Both companies are seeing higher costs to execute their business. Consumers are reshaping their behavior, so moving more towards essentials versus discretion. And I think the last thing is just that this is not going to abate anytime soon. I think there were a lot of conversations among investors that maybe inflation for the consumer has peaked. But these two companies are giving us very different signals that we're still seeing costs rising faster than prices and more pricing is to come. So for Target specifically, and I think Walmart saw the same thing, when they're placing orders 6 months in advance, they're looking at very different consumer conditions in the back half of last year. Pretty strong consumer with stimulus. Now that consumer is making some very distinct changes in their behavior, and that is affecting these discretionary categories. So a lot of this inventory is on in there too. When you look at inventory levels across these big three power retailers, very, very high relative to current sales patterns. So we are going to see some inventory release. And that's going to come through markdowns and discounts. And I think it was interesting, as you pointed out, TJ Maxx looking strong today. They're going to be a buyer of some of this dislocated inventory.
All right, family. Wow, that was a mouthful in just about 2 minutes. And what they talked about was the rise in cost in operating business. Listen, family, I've been in operations and manufacturing for about 25 years. And when they start talking about rising costs to operate their business, they may be talking about an increased price for goods. They could be talking about the increase in taxes on those goods. And they also could be talking about what's most important here is the wages that they pay their workers. And a lot of times what end up happening is when you see these companies taking tumbles like this, one of the first things they would like to do is try to find ways to cut costs. So you may see, hey, Target is developing a plan to save $300 million, right? And within that plan is, laying off or displacing, 3,000 employees nationwide. So we got to be critical and watch how they're going to play this thing out. All right, again, excess inventory. Now, listen, when those stimulus packages were being handed out from the government, man, it was billions of dollars on the streets, right? It was $1 billion on the streets. And so every month, excess of billions of dollars on the streets. So what happened? man, people had money to spend. So people were running to Target. People were running to Walmart. People were running to Costco's. People were running to Amazon. People were running to all these places looking to spend money, spend money, spend money. Because again, 85% of the people in this country do have a problem with saving money. So if you do have get an influx of cash coming in, what are you going to do? You're going to spend it. And the government did a great job of keeping the economy going. But as companies get a little greedy, they see the all the money out there. Now they can increase the price of some of their goods, right? They could do whatever it takes to maximize their profits, right? So anytime you have maximum amount of money on the streets, is going to increase some inflation, right? So now all that money's ran out, and now all of a sudden the companies aren't as profitable as they have been in past couple of years, right? And they have an excess inventory. So people aren't spending money as because people don't have the money now. They've all exhausted all of their money. And so the smart people, the people that being financially astute with their money, they're learning to save money. And one thing I've learned about this pandemic is it has taught me that having money saved is very, very important. So yes, I do invest money in the stock market and also save money. So you got to have a little bit of money stashed away for rainy days. You can't be, running to the banks. Running to the stores, or running to the movie theaters, and running to all these places anytime you got a little bit of extra money. Now, you do and you should set aside a little bit of money for your enjoyment. And you need to set a little bit of money aside for rainy days. So now you have, some people being smart, and a lot of people are being dumb with their money. And now, a lot of people don't have money to spend. They just don't have it. And so as of right now, the economy is going to suffer. Now you're going to have, rising interest rates, right? So as long as the interest rates are rising, people are going to be paying banks, a larger portion of their income. And so that's less discretionary income that they could be using to spend in other places. All right. So that's just a tidbit. And as these interest rates continue to rise, I'm hearing that they may rise up to 8%. Now, it may be a good thing, because when you take a look at the housing market has just been on fire. It's on fire. A house that was costing $250,000 is going for $400,000 in some places. They're even going for $500,000 in some places, and so that's pretty much utterly ridiculous, And now, so what's going to happen is, and the government, the Fed, is taking a look at this stuff. Now, what we're going to have to do is we're going to have to raise interest rates. So now that $1,700 mortgage is going to be looking like $2,100 or $2,200. So that's going to make people reconsider how much they spent on these houses. And as a result, you're going to have the buying of homes slow down drastically. All right. And as the homes, the amount of homes slow down. So now you're going to have the prices of the homes should come back down to a modest level. All right, but we're going to have to wait and see how that all shapes out. But the interest rates, cost of homes, that's going to have a significant impact on the economy going forward. All right, those interest rates, we definitely got to pay attention to them. Also, gas prices. Gas prices is ridiculous. As of right now, I know on the East Coast of Virginia, I think we're paying $4.30 a gallon, and I don't think gas should have never went over $2 a gallon again. But we are $4.30 per gallon. And again, the more money we spend, most of us, that live 30 minutes away, don't have subways or public transportation in our areas. We need our vehicles to get to where we need to get to. So we're gonna have to, go to the pump, fill those gas tanks up. So we're gonna have to use more money on gas, which is going to decrease the amount of money we spend in other areas. Okay. So interest rates, the amount of money we're paying for houses, the amount of money we're paying for gas, and they all have a negative impact on the economy. Now, if you are invested in some stocks like Exxon or Chevron, those should be doing really, really well for you. All right. But today we're going to talk about just Walmart and Target. So now let's take a look at Walmart's chart here, if I can pull it up. And so yesterday it was down almost $9. It was almost down almost $9 yesterday. Let me see here. All right, so when you really take a look at Walmart, we are trending back down. So I do have a couple of indicators here. I have the MACD at the bottom, which measures the momentum, and I also have the SMA, standard moving average. And so I have the simple moving average. So I have the 200 SMA and I have the 50-day SMA up. And so as we can see here, man, we are barely touching that, coming down, closely approaching that 200-day moving average. All right, so we do have a strong downtrend. So this is a daily candle here. Now let's take a look at the monthly candle or the weekly candle. So let's go out. And so when we take a look at the weekly candle here, so again, man, Walmart has been one of the safest stocks that you can invest in. As a matter of fact, Target also. So Walmart and Target are two pretty much safe stocks that anyone can invest in. When they say, hey, I want to get started invested in the stock market, what would you suggest? Say, hey, you can invest in places right? So Walmart is a place that everyone knows. And so so this has been a fairly safe and great company to invest in. And so as we can see here, we've had 3 previous weeks of downward movement. Then we had a huge sell-off yesterday. So we opened at $149. We closed at $122. Wow, that's a huge fall off on one day. Off of the bad news, excess inventory, because they have excess inventory because people aren't spending as much, and people aren't spending as much because people don't have as much money to spend, right? And so as of right now, could this be a just a knee-jerk reaction? Well, we're just gonna have to wait and see how things play out. But you take a look back at the past. If you take a look on the screen here, I have my weekly candles here, weekly candlesticks up, and you see these D's on the screen. So these are dividend payout. And so March 14th, we're paying 53 cents per share dividend. What are we paying now? 55 cents. So again, nice little income producing stock also with Walmart. But when we take a look at this stock here, we hit that 200-day moving average. Now, stocks really don't fall too far below the 200-day moving average, but we're going to have to take a look at it. Now, also what we're going to have to do is we're going to have to continue monitoring this 50-day moving average. Now, if we start getting some downward movement on this 50-day moving average and we cross over the 200-day moving average going down, that is what's considered like a death cross. That means we're going to have, there's a strong possibility that we could have further downward movement of this stock. So we can see downward movement all the way down to possibly, $100 per share if we can get this 50-day moving average to cross over that 200-day moving average. All right. But as of right now, we're going to just continue looking and continue monitoring Walmart to see how it performs. Again, on the daily, we see that it has been, trending down. Then we had huge fall offs, right? 2 bearish days. Now, let's continue watching the on the MACD. We do have the momentum going down to the downside. So let's continue watching Walmart because, you know, it's going to be hard to say how the market reacts because normally once we have these huge drops below the 200-day moving average, man, this is a great opportunity to get back in because, again, Walmart is a staple. It's an outstanding company. It's going to be here. It will get back up to that 200 day moving average eventually. So, stocks don't get too far away. We kind of snap back like a rubber band. And so that's what I'm expecting. But we're going to have to continue watching it. And when we have these large bearish candles, we really don't want to make a move as far as if we want to buy in right now or if we want to place any put options to the upside. So we want to just sit on the sidelines and we want to continue watching, how this thing plays out. All right. Let me see. Let's take a look at Target. All right. So Target here, again, man, Target been an outstanding company, strong move to the upside, dating back to January of 2020. It's been an awesome company, but again, we've had since the start of the year, stock's been trending down, and we actually crossed over on the 200. We crossed over the 200 SMA going down, which is a sign of what we call the death cross. And so if you would have placed a put option, basically betting that the stock could continue its downtrend, you could have rolled that option down from 230 to 199. So you could have made some nice profit there with a good put option, just playing the death cross. All right. So as of right now, we've had a move back up to the 200-day moving average. We crossed over it and we came back down in April. We crossed over the 200 simple day moving average going down. And so as of right now, we're still hovering right below the 50-day moving average, between 213 and actually, I'm sorry. It was actually hovering around, 213 to 220 until yesterday when it took that enormous drop. So it opened at it closed the previous day at 215. Then the next day it opened at 163. So that's just a tremendous fall off. Tremendous fall off. Is there a potential for it to come back up? We're gonna wait and see how this play out. There may be some opportunities there to jump in, play some call options, or to jump back into the stock and ride this thing up. But again, we don't know how much longer this downtrend could be. Now, no one really can time the market. But what we can do is we could learn how to read these candlesticks and understand candlestick development. All right, candlestick development. Now, when you look at let me see, let's go back to the weekly candle here. So again, when you take a look at the weekly candle, you do have a strong bearish candle, So the bears really came in and drove this price all the way down on this particular day. So, which was the 16th. So we're going to have to wait and see how things play out. But again, man, Target isn't going anywhere. The stock did take a tumble, but again, as I stated, man, with rising interest rates, people will have less money to spend. All right. With rising fuel costs, people will have less money to spend. And so now Target, Walmart, they may have to lower some cost to continue generating revenue. Now, again, they're still generating billions and billions of dollars. So it really isn't hurting them from a business standpoint. But as investors, we want to see growth and, so we're going to have to take a look at what they're going to do with their employees. So remember, whenever companies are losing or taking a lot of loss, they're always looking for ways to show the investors that they are saving money. And one of the ways that these large and one of the ways corporate America do this is by layoffs. So hopefully We won't see many layoffs. I really don't want to say any. I don't want to see any, but it's inevitable. These are the things that happen when the stock market take a tumble, when companies aren't generating the amount of revenue that that's expected. So let's continue watching Target, watching Walmart, watching the news, and seeing how these companies play out as far as figuring out ways to get rid of excess inventory. All right. Now, family, I know there was a lot. I didn't want to stay too long on the subject, but I hope the video added some value to you. All right. Also, I have a book here that I will be, I don't know if I'll do a summary on this book or I may just read the audio book. So if you want to listen to a great book, Believe in Yourself, The Power of the Subconscious Mind by Joseph Murray, I will do an audio book on this within the next week. So again, come back for good wealth building information, and come back for information that will help you increase and improve your own personal development. All right. Now listen, that's all I have for today. Keep coming back. Hit the like, hit the subscribe button. I'll talk to you later. Peace.